Hey, everybody, welcome to the Master Passive Income Show. My name is Dustin Heiner, and I'm here to help you get financial independence and quit that JOB by investing in real estate. And today, I'm super pumped to bring on a good friend of mine. We're hanging out in Orlando, Florida, and we're at a podcasting conference. And what we're doing here is just hanging out, learning from other people about podcasting, and then we're hanging out in this Airbnb. So my good friend is a fantastic midterm and short-term property investor, as well as coaching. He has an amazing podcast, 20 plus rentals in midterm or short-term. And that just seems amazing, but it's not just any short-term. Like we're in Orlando right now where Disneyland is. Well, Disneyland's great for short-term, but did you know that you could also do this in Midwest? You can like go in cities that not everybody's like, oh, I want to go there like a vacation. Well, we're going to talk all about that today. We're also going to be talking about the Real Estate Web Builders Conference. So many amazing things that are going on. But I have my good friend Kirby Atwell. Kirby, thanks for being here, man.
It's awesome to be here, man. And I think the Disney fanatics are going to yell at you because you call it Disneyland, and we're actually close to Disney World. So I know you're from California, so it's an honest mistake.
Let's call it Disneyland. That's a good point.
Yeah.
All right. Well, nobody skewer me. That's just the way.
Yeah, exactly.
Yeah.
It's awesome to be here, though. It's great to be back on the show, and I'm super excited about upcoming RubeCon.
Yeah. So for everybody, quick backstory. Kirby and I met through podcasting and been on each other's shows. And then I was like, Kirby, you're an awesome dude. And you invest in real estate. How about we have you come speak at RubeCon? And then fast forward, friendship. And now I was going to a podcasting conference called Podfest, great conference. And I said, hey, Kirby, you want to come to Podfest? And we get a big Airbnb. So if you're watching this on YouTube, you can see like this is our Airbnb. And it's fairly huge, and it feels like this whole tiny little city that they build of just cookie cutter homes of like 8-bedroom, 8-bathroom, pool, jacuzzi, and just
game room.
Yeah. Like they turn the garage into a game room, but it's made for Disney World. Disney World. But anyways, so then Kirby is going to be speaking at RubeCon, the Real Estate Wealth Builders Conference. Been there every year now. So it's our third year.
Yeah, last 2 years were amazing, and I've been investing for over a decade at this point. 2012 is when I really 2011 when I really dove into it kind of full time after I got out of the Army. And I feel like, I've learned a lot the whole time, but each time I've gone to RubeCon, I've walked away with like new things that I want to implement. Either it's new tactics or new strategies. Because there's such a diverse group of speakers there. It's awesome.
And then having different asset classes. Like I love residential. So like four units and below residential properties long-term, because I don't have to even think. Like I don't do anything and I make money, which is great. But at the same time, there's so many other great asset classes out there that you could invest in. And then finding the right people that you can work with, get coaching or whatever it might be. But anyways, I want to talk about you invest in Midwest, a lot of properties in the Midwest and short-term properties. But most people think, well, don't you have to have like a destination for these short-term properties? And we'll jump into this, but I want you to talk about Midwest. But then at the same time, we're literally here in Orlando for Disney World, and you're looking at this Airbnb, which we're paying, I don't know, $500 a night for. You're probably thinking they're not cash flowing, which we got to talk about. But anyways, tell me about these in the Midwest, like not destination locations that are good short-term properties.
Yeah. And I'm going to go through this in detail at RubeCon, but this is probably the hardest thing for people that I work with to get beyond, is this mindset of, well, who the heck is going to rent in Indiana? Like who's going on vacation in Indiana? And you got to get beyond the fact that it's not just vacations. Like I think there was 300 million bookings on Airbnb last year. A lot of those weren't vacation. It's just any reason that somebody travels. And so if you think about it, if you can find these pockets where you can buy a property really inexpensively, but yet there's enough of a population, so maybe outside of a larger city in the Midwest where properties are on sale, you can, and also if you buy multiple units, now all of a sudden the cash flow is through the roof, the net cash flow that you're actually putting in your pocket. So I just did an analysis of this property, which is a $1.5 million new build, compared to a relatively low cost multi-unit in the Midwest. being used as a short-term rental. And even if the numbers are much lower gross numbers, the net numbers actually are substantially higher in the cash flow
profit wise.
Exactly.
For everybody listening.
The cash flow. Yeah.
So, but okay. So, I mean, we're here in Orlando and get hopefully a lot more occupancy, it seems like, because it's so, I mean, but when you're walking through it, we're paying $500 a night. They have a huge cleaning fee because there's a lot of, this place is huge.
Yeah.
It just seems like help me to understand how that would actually work out, that you would make more money in the Midwest and, a three or a triplex, and then you have all Airbnb as well.
Yeah. So what I focus on is freedom. Like I left my job 2.5 years ago. And my main goal has always been around cash flow. Not initially. Initially I was flipping and didn't realize this was going to be a treadmill I'd be on forever. But then eventually I realized cash flow was the key to freedom. I didn't want to work forever. So you can buy, I think the allure of this investment is you can buy it for $1.5 million and you're hoping that it appreciates over time. And if it does 10%, that's $150,000. That's great. But you can't live off that $150,000. That's going to be in your, you get that when you retire or sell the property or whenever you cash out. What I want is cash flow. And so if you look at this one, say $500 a night even at a 70% occupancy, you can multiply that out. That's like $130,000 a year of gross income. But then you look at the mortgage on $1.5 million. You look at the pool cost to maintain that. You look at the size of this place. Like you said, the cleaning fee, all the expenses that go into it, the taxes on a $1.5 million house. Compare that to like a triplex. Like our most recent deal was a $300,000 property, $160 nightly rate. So nowhere close to it, but that's per unit. So you got 3 of those coming in. So even at a lower occupancy, 65% occupancy, you're looking at $113,000 of gross income. But then you look at our mortgage on $300,000 property and our taxes, and we don't have a pool, and the expectations of the guests are much lower. So we don't have as many refunds. And so all of that, our expense ratio is much lower, so that the amount of cash we're sticking in our pocket on a monthly basis it just blows it out of the water compared to this, where I don't think they're going to cash flow at all. The play here is you just hope for appreciation long term.
How'd you get into doing the short term? Now, obviously, we know there's a lot of people that actually do short term now. But when I first bought my first property, I was like, okay, the only thing this was in 2006. There wasn't Airbnb. There wasn't. Yeah. I think the VRBO might have been around.
The internet was invented, right?
Yeah, totally. It was, but it was so limited. AOL was dial-up probably. But anyways, it was, for me, it was like, man, long-term properties, because I didn't want to have to worry about. How did you get it? Did you jump right into the short-term?
I wish. I mean, if I could go back, if I could start, because Airbnb, I think, really started around 2010, but it really didn't pick up steam till like 2014, 15, 16. So I started flipping because I got out of the Army and I was like, I don't have access to financing. They didn't have these DSCR loans, which are basically 30-year fixed loans on a rental property. Back then, they just didn't exist. So I was like, well, I'm going to flip because it seems like that's how everyone's making money. And scaling a flipping company is a very tough proposition.
You're working a job. I mean, when you think about it,
absolutely.
Flipping, if you don't flip that next property, you're not going to make any money. How are you going to feed your family?
Exactly. And you never get ahead because there's no recurring income. So it's not like when you buy a house, that's you make, say you make $500 a month of cash flow. You can kind of set it on autopilot, add another one the next month or the next quarter or the next year. And now you got $1,000. And so that it just accumulates. And that doesn't happen with flipping. So I did that for 5 years. Took me a long time to.
How many properties did you flip?
About 75.
Ooh. Midwest too?
Yeah, all around Chicago, in the suburbs. We started with more affordable, which actually worked better. And then we got into luxury because we were like, well, if a $300,000 house works well, $1 million house works much better. And learned a lot of lessons there. And finally I got in, I realized this was not a long-term, this wasn't going to get me to my goal of financial freedom. So I got into long-term rentals and then just discovered this strategy by moving to Indiana from Chicago and had this empty basement, this walkout basement, and decided to turn it into a 1-bedroom apartment. This was 2017.
Got it. 2017.
Yeah, so we turned it into a one-bedroom apartment.
You're living upstairs.
Yeah.
The basement had a door that you go down.
Yeah, separate entrance outside. So, I mean, it didn't impact our lives at all. We had no clue what we were doing. We finished it right before Memorial Day, put it on Airbnb, and we booked it the whole summer right away. And we made $22,000 that summer. And so we were like,
that's like more than the mortgage payment.
Yeah. It was probably about 2/3 of our mortgage payment.
Okay.
But it was more than I was making on a lot of single family houses that I owned that were long-term rentals at the time. So I thought, is there a way to scale this? And so I started looking at other towns nearby and experimenting, learning lots of lessons and doing it the hard way, which is how I help people now, because I basically just tell them all the things that I made mistakes on and what to avoid. So
I've done so many mistakes. In fact, in 2006, when I first started investing, I didn't know what I was doing. I followed some guru. They said, what you want to do is find a property anywhere in the country, run the numbers, and then make sure you're making $50 a month in passive income. Like that's like the most. Like, but you're going to get appreciation. And this was 2006 before the crash. And everybody's like, oh, yeah. So I was at the stupid seminar. Actually, what I was watching TV late at night, because that's what you do when you're an employee. You go to work and then watch TV. Yeah. Go to work and watch TV. Some little events in the middle there. But as I was watching TV late at night, and late night infomercial came on. Hey, we're real estate gurus. We're coming to your town. We're going to give you a free 2-hour seminar. I'm like, that's fantastic. Yes, I'm going to run to that. And so I ran to that. And then it was all hype in the sales pitch. And they said, run to the back. Run to the back. It's normally $1 billion, but it's $1,000 today. I was like, well, I don't have money, but let's go ahead and do it anyways. Put it on a credit card. Anyways, I went to their 2-day seminar, which was, and even more sales pitch for a $50,000 course, a $60,000 course. Like if it was long-term properties, it was $50,000. If it was flipping, it's like $80,000. Like every single type of asset class, they had a course for it. And multiple thousands of dollars in the 50, 60, 70. I didn't have that money. So with that, what I decided to do was actually go ahead and try to do what they told me to do. So in 2006, they say, run the numbers, make sure you make a little bit of money in passive income, but you'll get appreciation, which I don't invest for appreciation, just cash flow like a business. Then, anyways, they told me this whole wrong process. I did it, and my property manager just started stealing from me. Like the first 6 months, it was horrible. Like at 6 months, started losing money. My wife said, what are you doing? Like, we don't have any money. And now we're losing money even more. But all these problems that, like you were saying, get back to your point, losing all this money, doing things wrong. Yeah. You figure out, okay, well, if that didn't work, let me rip that out of my business and keep the only things that actually work in the business. And then it's a blessing to be able to now share that with people. Yeah. Fast track what they've done, or sorry, what they can do because of what we've done.
Yeah. Well, I think in the biggest blessing for you too is that you didn't stop then. Because I hear that all the time. People are like, oh, I tried a deal back
it didn't work.
10 years ago, it didn't work. And think about your life. Like had you stopped, you'd probably still be working a government job in California, as opposed to being financially free. So, but that's how it goes in the beginning. So that's exactly why I think what you do is super valuable, that you can just avoid those mistakes, learn it from other people instead of going through it yourself.
So getting to Airbnb. Now, I love the idea of having myself owning Airbnb or short-term properties, even midterm properties. I personally don't yet. And I think the big reason why is because it's so comfortable doing long-term. Yeah. It's just, my property managers don't do a whole lot because the property works for you. There's no turnover. Yeah. I'm not trying to argue it. My point is that I think for me, how I love residential long-term, but I'm totally fine. In fact, my wife and I are probably moving from Phoenix. That, Lord willing, I have no clue if this is what's going to happen. We're looking to move from Phoenix this year to Nashville, Tennessee, because we want to be around more grass. My wife and I would love to own acreage. Yeah. My goal in life is to have a house that has a shooting range in the backyard or on the property, so I don't have to drive, 20 miles to get to a shooting range. Nice. But that's my goal. And so hopefully there'll be a lot of land in Tennessee that actually, we could do that on. You can do that in the desert, but it's brown and cactus and dirt and rocks. So anyways, but we're going to move. So we have our home in Phoenix that is perfect for midterm or short-term property, like literally perfect. There's all the baseball stadiums all around from spring ball. They all come in town here. So we've already been filling out, like getting rid of furniture my wife and I are really frugal. So a lot of our furniture was just like somebody's giving it away. I'm like, okay, we'll take it if it, looks okay. But anyways, this, we've now been getting rid of that stuff and then getting new things that we can now, in, let's say 6 months from now, sometime in the summer, whatever, we can literally leave this house and not take a bunch of stuff. That's the thing. I didn't want to cross the country with a lot of stuff.
Yeah.
Then I was like, you know what? I can leave so much stuff that we could even come back and use this place. But then what we're going to do is purchase a property in Nashville area that we can either do short-term or mid-term, but move into it and furnish it. Basically, like you're flipping a house. Like you can live in it while you're flipping it, and then you move out and have somebody, if you flip it. But same thing, we're going to buy the house and furnish it for short-term or mid-term properties, and then keep doing that. So I personally like just my own risk tolerances, like 80% of my portfolio in long-term, because I literally don't think it just makes money consistently.
Yeah.
Rent scope over time. But then 20% of my portfolio being in short-term, because you make a lot more money.
Yeah.
Now, what are your thoughts? Like portfolio-wise, it sounds like all yours are short-term.
Yeah.
Do you ever see yourself doing long-term?
It's interesting. And I think one of the cool things about real estate, it kind of aligns with this, but I just saw I forget who it was. I just saw somebody talking about how your portfolio, like we're taught your portfolio should be diversified, but your portfolio should match your expertise, And
Totally.
So to me, I've tried stocks, I've tried other things, and it just wasn't my cup of tea. But once I discovered this strategy, I went all in. I had 24 long-term rentals at the time. I sold them off.
Sold them.
Yeah.
Quickly, I can't remember your point, but you sold them. Why would you sell them? Couldn't you just turn it into Airbnb?
They were in areas that they'd be more challenging. They would have worked, but they would be pretty challenging. In south suburbs of Chicago, the numbers just weren't appealing enough. And initially I thought I needed to be close. Like I needed to be right down the street from them. I've realized over time with the right systems, you don't.
Yeah.
So I focus. And what I advise to people is like dive in on one sector, but not that my strategy is the way for everybody. Like I see what Zach's doing with the lease option properties, and I'm like, man, that's so smart. Like
he's making a killing.
Yeah.
If anybody doesn't know, like if you're watching, listen, as Zach, he's a part of Master Passive Income as well. He does lease options or rent to own, but he has no expenses. Yeah. Because the tenant is actually buying the property from him, and you take care. If there's a roof leak, you got to fix that. Like, consider me the bank.
Yeah.
Wow. And with lots of properties, no expenses.
Yeah.
Rents go up. Oh,
yeah.
It's cash flow.
Exactly. So I see that, or with Seth Williams doing the land flipping and stuff, and these are really interesting.
That got me. I was like, I want to invest like Seth.
Yeah. So I mean, there's so many interesting strategies that a lot of the speakers at Rubicon do. And it can be distracting if you let it be, but also I think you just incorporate the ones that make the most sense for your life and your goals. Like you just talked about, like, the short-term rentals can really fit in. You don't have to build a business around short-term rentals, but you can incorporate it where it makes sense and then have your main business focus that you've got your system set up around. So
you hit a point or a word, but then the point is diversification. We hear that all the time when somebody's investing in stocks. Like they'll say, you need to diversify. Well, somebody really smart, his name's Warren Buffett, like one of the best stock investors ever.
I've heard of that guy.
Yeah, pretty sure it's Warren Buffett. Hopefully I'm quoting it right, but he said diversification is for people who have no clue what they're doing.
Yeah.
So I don't diversify in anything that I'm not, like you said, I'm an expert. I literally know my investing.
Yeah.
Now, if I'm going to give it away to somebody and hope something sticks, like let's say 10 different options, stocks, lending money to whatever, might just pick a bunch of different types. Or if you're just in stocks and 10 different stocks, you're trying to hope one that might fail, the other 9 are going to work out for you.
Because you have no control over that.
Control.
Yeah.
With our businesses, it's a business.
Yeah.
And we make money. We know we make money every single month because we don't buy the property unless it makes money for us. So why would we diversify into things that we don't know or have control about?
Yeah, absolutely. No, I feel the same way. And not to say that eventually you don't start to like, you hear about, billionaires have like 18 streams of income or something, but they didn't start that way. They got really good at one thing. And then they did start to diversify into other things after they had a great system around that one thing. So
I love the idea that there are multiple streams of income. When you have a job, you get one. Maybe you have a side business or you sell things on the side, like you have another stream of income. But when you have just one stream of income, what if something happens? So I'm totally all for lots of streams of income. I mean, shoot, with all the, I think 5 businesses I have now, lots of streams of income, which is great. But they flow into my river of income, which is my real estate investing.
Yeah.
I just keep, because that's where I make the most money. That's where I control everything. That's the properties that I could buy and give to my kids eventually. And so with the river of income, every stream eventually goes into a river, which is like, man, it actually works out so much better because I store my wealth, I make more money and can pass it on.
Yeah, absolutely. By the way, the pool guy just showed up dipping into their cash flow even further on this property. So
getting back to the midterm and short-term property, like how this functioned out, huge place, but you believe that, and I 100% agree, I'm not saying I disagree, but yeah, so there's so many expenses here. It costs a crap load probably to make, and yet it's a build. And yet, if you did something in Midwest or someplace that's a lower price point, that you can actually do midterm. Anyways, I want to get quickly back to, like, I was liking the idea that you were talking about utilizing the Midwest or buying lower cost homes. Mm-hmm. Now, here's the thing that I know about you that you definitely need to share. So, let me ask you: would you ever buy a property that you can only cash flow if you did short term property?
Yeah, no, that's a great point. And that's one of the other big benefits of this strategy of these lower cost properties is I could flip, especially the multi-unit properties, like a triplex like that. That thing would cash flow really well as a long-term rental. So either way, we're in a really good position. And I probably wouldn't do a true long-term rental. I'd do either a furnished long-term rental or midterm rental, which is the strategy we use in the off season typically when, the price points are lower. We can rent it out to a nurse or a worker or somebody who just needs like a 6-month lease. And we can get a lot more than what we'd make as a long-term rental.
Makes sense. We have, over here last night, friends of mine, Dennis and Vanessa, they have a property in Phoenix. And in Phoenix, they were living in it. And they said that I've been talking to him for, I don't know, 3 or 4, maybe even 5 years. He's been wanting to do more real estate. And he eventually bought a house in South Phoenix. And his original property left is in North Phoenix. And he put it on Airbnb, and somebody's renting it for 90 days, $5,000 a month profit, he says. I think it's profit. Yeah, because he owns a free and clear. Yeah. So anyways, he's making $5,000 a month.
Yeah.
I was like, what? And that is so, like, that covers and more your mortgage payment on the new property that you have. So
it's the same property. Yeah.
It's amazing. Now, let's quickly jump to the Real Estate Wealth Builders Conference. What I love about the conference is, number one, it's no sales pitch. Like we have things that like people work with you, like they pay you and you coach them, fast tracking their success, skipping over all the problems that you've had to have and learning from your mistakes, just like learning from my mistakes. But it's not like those, honestly. Well, you've never been to another real estate investor conference, have you? Or have
I used to.
Oh, okay.
Yeah, I used to go to quite a few of them. But I got really turned off for the same reason you just described. It was like every time you go there is like the sleazy guy up in the front of the room who's like yelling at you to go to the back and you're, making fun of you if you don't. And it's like high pressure. And I was like, this is ridiculous.
They even use tactics because when you're supposed to run to the back, it costs a lot of money. Yeah. They even use tactics like this. They say, okay, like the first part of the seminar, we're going to help you in your investing. You need a lot of capital. You need a lot of credit. So I want you, this is what they did to me. And they still do this now. Now I'm going to knock this business model, but if anybody does it still, I don't want to go to your conference. Yeah. But they say, go and call up every single one of your credit cards and get them to raise your credit limit.
Yeah.
But this is for your benefit.
Yeah.
It's your benefit because you can use this in your real estate investing. Little do you know, you come back, let's say, they even did this. Whoever has the most credit limit increase, you win this thing. They did that, yes, and they still do this. There are some big name people, I won't say, that literally big name. When you think of big name, yes, big name. I'll say this. You even had the guy on your podcast.
Yeah.
Well, that's the most I'll say. But anyways,
well, and a lot of those guys hire out a company that's just sharks.
Yes.
And so they take a cut of the sales. So they don't really care about, the people at all. They just want to get the sales because they're in and out. And so, I'll quickly say, I tried to advertise RubeCon, basically just letting people know about the conference so they can come to the conference and learn and not be sales pitch on his network. And he said, no, you're competition. I'm like, competition? What are you talking about? Yeah. Turns out they're in the event space too. Anyway, so getting back to it, what they do is whoever gets the most credit limit, they win a prize, but it's all to get you to have more credit to go back and buy their credit or use their credit cards, your credit cards, to buy their $50,000 things and $20,000. Like I even saw a lady in 2006 when I was there, I saw a lady literally in the back, like getting 8 credit cards. Like, okay, now this, and how about 10 on this? Yeah, dude, you're just It's rough. And so what I didn't want was that. I was like, if I'm going to go to any conference, I don't want it to be that. Yeah. And then I thought, you know what? Why don't I create something that I want to go to myself? So with RubeCon, we have so many amazing real estate investors who are successful themselves that are personally seeing the vision of helping people and seeing the idea that, you know what? We can help people and get them to, like another human being, helping them to become financially independent, invest in real estate, get something that they really wanted. That is such an appealing thing for me, that because we're investors. Of course we make money on the coaching. If you want my time, you're going to have to pay for my time. If I wasn't going to get paid, I would just hang out with my wife, kids, and just go travel and do all that sort of stuff. But at the same time, there's so many other great things about bringing people together. And with that, you have the community, you have other asset classes and experts in those asset classes that can teach you. So tell me about you've been coming 2 or 3 years. What have you seen yourself? Because I know you did quickly mention that you get ideas. Oh, I can implement this. Mm-hmm. But on top of that, you coming and teaching, talk to me about like your view of the community, the people that come there, and the type of environment that we try to build. Yeah. It's kind of the opposite of what you described, in terms of high pressure and stuff. It's every speaker there understands your value. That's why I agreed to speak initially when you reached out, because I was like, I know your values, they align so well with mine. And so I know this is going to be a place I want to be. And so you attract other people like that. And so then there's a whole community built around high values, providing high value. And so that's what each session is. And so you can kind of pick and choose as you work through the day, what strategies interest you. And there's so many takeaways. It's not like this just general fluff knowledge. Like there's really actionable takeaways you can take away from these different sessions. And so that's what it's been. And this year for my talk, I'm going to be backwards planning into how you can make $10,000 a month of cash flow in a relatively simple fashion. So we're going to talk through the step-by-step process of getting there. And I wanted to make it as actionable as possible, as specific as possible. So I'm super pumped to be there. I need to go to your session. Get to $10,000. Yeah. And then, honestly, like even doing the midterm or short-term properties, of course, it's really not rocket science. But if you can get around somebody like you that has done it, that can say, hey, this is, if you go down this path, this is probably the direction you go because I've done it and this was the outcome and I don't see another way. Let me give you other options that you can choose from. That's what now, whenever I do anything new, creating this conference, creating the Real Estate Web Builders Conference, I didn't think, let me just do it myself and figure it out. I literally called up my friends. I have 3 friends that have really big conferences, 2,000, 3,000 person conferences. And I, quote unquote, pick their brain. But they're awesome people and they're friends of mine. So hours of me just talking to them, getting lessons from them. And there's not very many people that own conferences. And so, they were excited because another person's doing conferences. Yeah. We're nowhere near competing. One's podcasting, or 2 are podcasting, one's like blogging and stuff like that. But with that, I didn't want to do it on my own. I didn't want to reinvent the wheel. They've been doing it for 10 plus years. Smart. It's like, why don't I work with them and fast track my success? The first thing that all 3 of them said
was all the conference owners, what they said was, you're going to lose money the first 2 or 3 years. You're going to lose money. I'm like, what? I don't want to lose money.
Yeah.
I'm not in this to lose money. He said, yeah, just expect that because hotels are expensive. Yeah. But anyways, they're telling me like all these tips and keys. And even one thing, like getting sponsors. You should get sponsors because it's really expensive. But these sponsors, they're good services that your attendees can use. Fast forward, basically what it came down to, they fast-tracked my success because I learned from their mistakes, everything, and then their successes as well. Same thing with real estate investing. If you get around people like you, like people join your membership or your coaching that you have, they get the course, you literally teach them. And my students have even gone to you and actually got their property and build it out. But that's the great thing about being around people. Well, not just people. There are a lot of people that sell things. Let's say they create a course and they just sell it. They might be investors. I'll give them a benefit of the doubt. Maybe there are investors. Yeah. But it just seems like some people can't. And the reason why you and the other speakers are at RubeCon is I see you guys as generous, wanting to give, and seeing the vision of let's just serve people. And that's why I love having this community of people. And honestly, like the community feel, the way that everybody helps each other, the way that everybody's friendly. It starts with people like you, like the speakers. Like if the speakers were jerks, it's going to have a different feel. Yeah. Because I've been to conferences where the speakers just came across a little arrogant, and then everybody else in like all the other people feel like they're on guard and they're arrogant too. Yeah. What are your thoughts?
Yeah. No, the community is, it's a great community to plug into because there's been so many different times throughout the year that I've reached out to different people or had conversations with different people or helped different people from the conference. And so, it's not like you just go there and you collect some information. You collect contacts and relationships that, now we're here at this conference together and we're learning so much together and we're building our relationship. And that comes from being there, initially and creating that.
And like, I've been to conferences where I just got my own hotel room and just went and attended that. But at the same time, I would go to breakout sessions and then leave, and then go to the keynote and then leave, not really take part in it. And then I realized afterwards, like I'm missing out on like literally 90% of what a conference is about. People that are paying money to go and like, they're so serious about what they want to do. They're going to pay money to fly, to pay money to get a hotel, pay money to get a ticket. They're not just kicking tires. Yeah. They're not, let's just see. No, they're like, I'm serious. I really want to do this. Absolutely. Now with you, what's the future for Living Off Rentals? Everybody definitely need to check out the podcast, Living Off Rentals. Amazing podcast talking about everything in real estate investing. But with that, like, what's the future for Living Off Rentals? And then because you're still buying, like us, we're still investors. That's we first and foremost are investors, but also Living Off Rentals. I want to see, I want to know where's the trajectory. Where are we going with that?
Yeah, it's been an interesting discovery process because when I was flipping and when I was even doing the long-term rentals and the short-term rentals in the beginning, I was in hyper acquisition mode all the time. So it feels like you're always just on this, you need the next deal, you need the next deal. And then we got to this tipping point of 8 short-term rentals. And that was our goal initially, because that would more than replace my income of my corporate job.
You saw how much money you can make and you multiplied it out. Okay, 8 would be good.
Exactly. Okay, yeah. And we kind of underestimated actually. I could have left sooner. But once we got to that point, then all of a sudden it was like, I had to change that feeling or work on that feeling of, I need another deal because now we had the income to replace the income, to replace our W-2. So at that point, then I was I kind of switched. I turned off all my paid marketing because I just didn't need it anymore. And then I would just take the opportune deals. I'm still always actively looking for deals, but I can just take the ones that are the best deals, the cream of the crop. And it's been so much more enjoyable because I don't have to do all these deals that I didn't really want to do.
When you're first starting, or when you have a goal of being financially independent or whatever it might be, like you're just working hard going after it. And then eventually comes time like, wow, I attained it. And I'm now, I don't have to have the pedal to metal, exactly. Full speed gas all the way down.
Exactly. And we're all like very motivated. If you're motivated enough to get to financial freedom, you're still going to be doing work, you're still going to be working in it, doing more deals, but it's in a way that is so much easier. And so then that freed up my ability to work with other people. So now I've worked with almost 200 people individual, like personally, to help them do this as well. And it's been super fulfilling. I mean, people literally tell me it changed their life. So, so now my goal is to continue to help other people. You know, we keep 1 or 2 projects going at a time. And we'll just keep adding them to our portfolio, just because it's not a huge lift. And then, helping other people do the same thing.
Same here. When I was able to take my foot off the gas, I felt like, well, I'm a doer too. Like I just constantly love building, love doing things. When I was able to take my foot off the gas for my acquisition,
yeah,
I felt like, oh wow, like a deal will come. I'm like, yeah, it's not great. I could pass. Before that, when I was like, I need another deal, I would take deals that weren't the best.
Yeah.
But now, praise the Lord, the longer you hold a property, the more money you make. So now the ones that were just kind of like, now I'm making a lot of money because I have them for a long time. But it's nice now to be in a place where you're financially independent. And then when deals come, you're like, that's a good deal. Let me take it. And then what I love is you have 40 plus hours of your life not working for somebody else, building whatever it is for them. You could do whatever you want with that time. So now I build more businesses because I have the real estate that's already doing so well. Like I don't do anything and it works. And then maybe 30 minutes of my time personally when I acquire a new property. You know, somebody sends me a deal. I look at it. It takes me 5 minutes at most. Then put an offer in. You know, and then it takes me 5 minutes to tell my property manager, okay, you know, start looking at the property, get ready, or give me a quote for how much it's going to cost to fix up. Another 5 minutes to get the title company, sign paperwork. Anyways, about 30 minutes at most of my personal time to buy a property. So it's not really that hard. Then you have 40 plus hours of your life to spend with your family, to go travel, to build. I love building businesses. Like I'm always doing and doing and doing. Now, so the last part not last part, what I was also thinking about was as you are acquiring more properties, have you ever thought about going to like Hawaii market or, you know, huge destinations? Is that ever an idea for you?
You know, it's funny you mentioned that because we're actually in the process of building 2 duplexes right now in Florida, in South Florida, in Port Charlotte. So
you're like personal, that you're not partnering with anybody. This is,
I have a couple partners who are putting up the equity portion.
Yeah.
And so, but yeah, it's I'm doing all the work. We lined up the builders. I have a builder relationship with the guy down there who I've known for years, another really high character guy that I really trust. And that's why I feel so comfortable. But our goal initially, my wife and I, was to, you know, use economies of scale, go deep in one market. So where we can use the same cleaner on all our properties, use the same handyman, understand the rules, build relationships with the count or with the town and with realtors. And so do that and quickly get to a place of financial freedom, and then have a secondary location in a warmer climate, like Florida, that we would much rather spend our time in.
Wisconsin?
We're in Indiana.
Indiana.
Yeah.
So
yeah. So in the winter months, we would much rather be down there. And so we can rent these out. And so we're getting, again, economies of scale with 2 duplexes. Each side sleeps quite a bit. They're 4 twos on each side, and then a shared pool in the back. And so you get the economies of scale of building the cost of the pool is divided amongst 2 properties. And so from a pure cash flow perspective, I would just keep investing in Indiana, but there's a lifestyle perspective too, and it still will cash flow. The numbers still make a ton of sense, building there, but, it's a different type of investment and it fits into our lifestyle really well. So to answer your question, that's our secondary market. It's still a cash flowing market, you know, for a tropical, relatively beach area. But not quite what you get in the Midwest that we found.
I love it. Kirby, so awesome. Love having you on the show. Love being friends with you and hanging out here. Everybody's going to want to check out your podcast, Living Off Rentals. Everybody should check it out. But how else can they find you? You're big on TikTok, I think, big. I have like 8 followers on TikTok. You got plenty more than that. But anyways, how can people find out and reach out to you?
If you want more information about like the steps of how I invest, like my methodology, livingoffrentals.com/start is a great place. I did a masterclass there that walks through the steps of the way I think about investing. And so that's a great way. Or all the social media, anywhere Living Off Rentals, you'll probably find me. So.
Awesome.
Yeah.
Thanks, buddy.
Thanks for having me.
See you at RootCon.
Yeah.